Welcome back, everyone. Probably one of the worst things that could happen to a trader happened to me today. Show up on time, do the pre-market analysis, know what you're looking for, execute the trade, and I got stopped out by 1.5 points, and then the market runs all the way to I take profit. It's part of trading. It's why we do it. What I want you to take away from this video is how I managed it so that you can do the same. I didn't start panicking, didn't start freaking out, taking a bunch of poor trades because I got stopped out. Took the loss, recognized it was high resistance liquidity run. We had decoupled markets between NASDAQ and Dow, and that made me patient and not take any more risk on this particular day. This is extremely important because I'm in significant profit from the last few months into August. And if I go on tilt today, if I get upset, if I take a big losing day, that would make me unprofitable long term. So I know you guys see the winning, the small losing days, but it's even knowing how to control yourself on these difficult days that's a big factor in your long-term profitability. Another takeaway from this video is the importance of partials. So if you're going long and the market trades up into a premium, you want to start paying yourself, because for many traders, if you don't take a partial, that can be the difference between a red trade or a green trade. And I want you to know how to manage your trades in the best way possible so that if you do the work, you get in the trade, you're able to pay yourself when there's money on the table. Enjoy. All right, so we've had the Monday open. We've been consolidating here, so nothing too eventful. The reason I wanted to go live today is because I wanted to touch on some things with the economic calendar. These are all things you guys are going to have to weigh out when you're doing this solo. So tomorrow we have CPI. Today it's a Monday with no high impact news. I just saw President Trump slated to speak at 10 o'clock. I did not realize that. I was not aware of that. So that is new information to me. See, that's why you always check your economic calendar. So first things first, before you start trading the session, you never not look at your economic calendar every single day, because you never know. They could throw Trump or Powell in there. Who knows? Shake things up a little bit. So we'll see what old Trumpster has to say here in a few minutes. Not too worried about that. That's not even the point of why I opened this up. Well, it is a good point because now you see why it's always good to check it. But main takeaway is tomorrow we have CPI. So today is a Monday with no high impact news. So that will cause me to manage expectations today. We're in a bit of a range here on the hourly chart. We have the buy side here, which is my draw. However, there has to be a framework for the market to get up into those levels. As of right now, order flow is bullish. Everything I'm looking for top down is bullish. Now let's have to zero into our lower time frames and see if they agree as well. So midnight opening here, they drop it down, take out a measure of sell side here. So in terms of our liquidity here, we have the sell side here from the London lows. And then buy sides all the way up here. And here. So we've got our liquidity zeroed in here on our 15-minute chart. That thick black line, again, keep in mind what that is. Sorry, that's that daily rejection block here. So that can be an inversion. So we have that as a premium target, but it can also use it as support as well. All right, so 5-minute chart here. Got our liquidity marked out. All right. And let's drop into the 1 minute. So I favor buy side. So these equal highs up here that are layered, I favor something to run up into that. Just so we're on the same page. I am bullish here today. All right, so we have that fair value at that SIBI. That's what I'm watching right now for this session. This gap here that we just traded into. And let me jump over here to ES real quick. No, not the Dow. Let's go up to the SPOOs here. All right, S&P 5-minute chart. Just show you guys real quick. You see these equal highs here? That has my attention for SPOOs here. All of these equal highs there. All right, so I want to see if NASDAQ can close above this gap here. I treat this as a bullish breaker.
Order filled.
All right, so I'm going to take this here on a low risk long. All right, so really tight risk on this trade here. All right, so going long inside that gap and this bullish breaker here. Stop loss is below that. So stop loss is below this wick here and this gap here. I want to see us close above that and start to see some speed above it. All right, so Dow's making lower lows, decoupling with the NASDAQ again. I don't like that for higher prices on NASDAQ. So I'm glad I'm in here with low risk. Tight stop here. So Dow needs to get back in sync here. So those are all things that make me pleased that I'm in with low risk here. Low risk meaning just risking 300. Higher risk would be like 500 to 600. So like 2 contracts would be like my highest end leverage. But because it's a Monday and all the factors I covered in the pre-market, I'm comfortable being in here with light risk today. All right, so the stop is going to get reduced here. So now we have ultra tight risk here today. I want to see speed above this high. I want to see it really rip through this here and then get up into the buy side here and here. Remember, you guys manage your own trade. Don't just copy what I'm doing. I have 1 contract and I'm going to manage it just with the stop loss. First 20 points in profit would be here at the 35 at this buy side here. So again, make sure you guys are paying yourself at levels that make sense. There's 20 handles there. Getting speed to this high like we'd want to see. All right, stop loss is going to roll. So we essentially got basically no risk on the table now. So content with that. All right, guys. So we're getting up here in a premium. Make sure you guys are getting paid. Do not regret your decisions today, please. Copying me. I'm still not a huge fan of how the Dow's selling off. Let me show you guys here. So we're still seeing heavily decoupled markets. Nasdaq's trying to trade higher. S&P is just lost here in the middle. And we have the Dow making lower lows. That's what I'm telling you guys. Make sure you guys are getting paid here. If it stops me out, it's not going to ruin my day. It might ruin yours. So Dow is dropping right now. That's not boding well for higher prices on the Nasdaq. But in the trade, in the risk, so I trail the stop loss. So whatever it takes from me, I'm comfortable with that. But still have the opportunity for it to get to my best case draw. I'm just not a big fan of how the markets are decoupled here. Right, S&P's making lower lows here. Not something we want to see for bullishness on the Nasdaq here. So they're probably going to grab that stop there. Yeah, that stops me out with reduced risk there. So is what it is. Told you guys why at the beginning. Probably shouldn't be over leveraged today. Don't want to do any dumb shit, especially not in this market profile here today. So sometimes I know these lessons aren't as sexy, not as flashy, but just as important as making money. Because if I lose my ass today, then what does it mean for everything we've made up to this point? You get what I'm saying? So with that, let me share what I was looking at here real quick, and we'll get over to the messages real quick. So dealing range here from this low to this high, buying here in a discount from the expected range. One of the things that you guys need to understand is if this is the range we're trading in, right, from this low to this high here, you guys see me with my trading in my current form. I'm always looking for the most part for the external range liquidity here, like the best case target. For you as a developing trader, you don't need that. You can make all the money you ever need just trading inside the range, right? So between this range low, this range high, just this move from discount to premium here, that's all you need, and you can make all the money you would ever need with that. Right? I'm at a different stage of my trading than where you guys are at, right? And that's not a knock against you. It took me a lot of years to get to this point. But just what's wrong with going long here, right? And taking your 25, 20 points, right? Not a lot of day jobs are paying that. You get what I'm saying? So just doing that inside the range is smoking what everyone on fucking YouTube is doing. Is smoking just about everybody, right? So even just trading inside the range is more than enough, just like my man Yannick did, right? Long and discount, sell it at premium. That's why I'm telling you guys don't copy my trades, right? Because I don't care if it comes back and rolls and stops me out, right? I'm not really excited about the money that's fluctuating up or down because my risk is so low. But for those of you guys that are developing, maybe it makes sense for you guys to get paid at a premium, right? That's why I'm always reminding you guys to manage your own trades because hey, maybe for you, 20, 25 handles is where you're at in your development, right? I'm trailing the stops. If it knocks me out, that's fine. I'm already anticipating today being a more difficult day. And I want to show you guys, you see what an advantage you have over retail by knowing the economic calendar. Retail doesn't know their head, doesn't know their ass from a hole in the ground, right? So they're just coming in here gambling today. But we're coming in here with managed expectations, understanding that it's probably going to be a little more difficult, right? Doesn't mean we can't take a trade. Doesn't mean if the model forms we should be scared. It just means we should manage expectations appropriately, right? And if you see this price action here, I think in the first 30 minutes of trading, it would be appropriate to manage expectations in something like this, right? It's not like the easier days when we trade when the market's a lot more fluid. You can see here, like on Friday, for example, this is an example of like a easier low resistance liquidity run, right? The market's a lot more fluid. It's going somewhere. When it's being held like this, it's a lot more difficult to trade. And then if you lose control of yourself or you don't have self-control, it's really easy to blow up in something like this. Really easy to do that if you're not being mindful, if you're not managing your risk, controlling those things, because it can really get away from you on a day like today. Awesome, man. Congratulations to both you guys. Trader paid, account just funded, first time in 4 years. So grateful with you, Dylan and team, everyone at AT. Man, appreciate you, Yannick. You've been putting in the work. You deserve it, man. Doesn't come easy. Doesn't come easy. I know, yeah, I'm able to give you guys guidance and shorten that process, but the hard work is sold separately, my man. Really good job, Yannick. Love to see that. Huge congrats to you, bro. And the good thing is you got that account with good habits. So what does that mean? Now that you're funded, you're going to have those good habits. Everyone that gambles through evaluations, they get to the funded account and they realize, hey, well, I can't gamble here now, right? So they usually blow it up like that. The fact that you got that account with good habits, right? Like just like we talked about when we first started, right? Delays the process in terms of how quick you're getting gratification, but now you're going to be able to actually be long-term consistent and sustain it. Whereas most are just stuck in a cycle of boom bust with no self-control because they're just in a rush to do something. Really happy, Yannick. Perfect example of what someone who takes the information is coachable, and it's so possible to get consistent in a little bit of time. How long have we been working together, Yannick? 3 months? 4 months? I think about 4 months. 5 months. Starting month 5. Awesome, man. 5 months already seeing your consistency. Testament of hard work, man. Love to see it, Yannick, and I appreciate you sharing all the time with the group, sharing your journal logs, what you're looking at, because pretty soon, man, you're going to have an awesome story, and everyone's going to see how you got there. Love to see it, brother. So that's it, guys. I said I would sign off here as we got into the new week opening gap, but I know it's been a difficult month for some of you guys, difficult in the sense of just how price is delivering, the difficulty in holding positions and whatnot. So I want to stay here a little longer with you guys, share some of these insights that I had to learn, I had to figure out as I was developing to hopefully speed up that process for you guys. Hopefully you guys can see the markets aren't broken. They're still doing the same things day in and day out. It's just a matter of little slightly more difficult market conditions, but this is very expected. So I want you guys to screenshot this, have it in your notes. High resistance liquidity run, newsless Monday, day before CPI. These things are repeatable and they're consistent. That's why today was low hanging fruit, meaning I get in, pay myself a new week opening gap. That would be it for the day. That's all I would do. Move to the sidelines, enjoy the rest of my day, and get to working on mentorship content. Like that. That's what my intention to do today was. So hope this was insightful, guys. I will see you guys tomorrow for CPI. Hopefully we'll have some little better action to work with here. Clean up, take some more bank before we close out the month of August.